How can I see my screen? Yes. My screen restored. How can I see my screen? My screen restored. Mhm. How can I see my screen? Sorry. Good afternoon, friends. Today is 8 October and so fourth session which we are doing, and kindly I will request all to mute. Good afternoon, friends. Today is 8 October and so fourth session which we are doing, and kindly I will request all to mute. So today we are going to discuss the relevant key topics which you can see on the screen. It's all the changes which happened in the month of September, covering the notifications, circulars, a number of writ petitions, High Court judgment and rulings. We are covering both from a GST and the erstwhile indirect tax law, customs, and foreign trade policy. And if we talk about, yes, end of September was always a confusing time for people. There was a due date for GST 993 was there for e-invoice, and the government has issued number of notifications, circulars in last minute. It's given a big relief. Now we need to understand where we are now. To start with, I will first take the case which we also discussed 2 months back in the month of August on the inverted duty structure refunds on input services. In the month of July, one judgment came from Gujarat High Court, which had given a big relief to the industry, who all are into the IDS, by saying that the Rule 89.5 is ultra virus to the Section 5432. So the formula given for that, it's not in line with the Act, and so it override the Act, so it will not sustain and bring ultra virus. So all people were in good relief, and the way the judgment has been pronounced and the reasoning has been taken, yes, it's really a good case law to refer, and people are looking about the whether they need to claim or not. But in the last month, Madras High Court has given the ruling, and just they did not consider the ruling of the Gujarat High Court in the case of the VKC footsteps, and they have gone through their own interpretation and understanding of the law, and the ruling is completely reversed. Now we need to understand which ruling needs to be followed and what should be next step. And second, what will happen finally at Supreme Court? No one can say what will happen, but yes, looking to the principle and the judgment has been pronounced, at least we can put our own interpretation and the judgment, how the way ruling would come. So if we talk about the judgment of Gujarat High Court, they explained about input services, capital goods. They have discussed about why 54.3 allows refund of input services. It does not restrict only for inputs. However, if you read the judgment of Madras High Court, and I will take a specific aspect which they have discussed in given ruling. First and foremost, on which Gujarat High Court told If 54.3 read with 89.5 restrict refund of input services, it is against the Article 14 of the Constitution of India, which gives the fundamental right in that way. Here they told no, it does not infringe Article 14 of the Constitution of India. Then question they put out, refund is a statutory right. Yes, they accept, but only to the unutilized credit that accumulates on account of the rate of tax on input goods being higher than the rate of tax on output supplies. So in their view, 54.3.2 restrict to input goods. So as per them, it's a valid classification and valid exercise of a legislative power by which section itself restricts the refund of input services. So no question of looking into 89.5. Another point which they mentioned about, there is no necessity to adopt the interpretive definition so as to save the constitutionality of section 54.3. So it means rule is not overriding the act. Being the section itself is putting the restriction, the question of rule overriding does not arise. And the last rule 89.5 of the CGST rule as amended is conformity with section. So in overall, in their view, section 54.3 allows only on inputs. It does not allow on input services. The question of challenging it does not arise. So it's intra-virus. Ultra-virus is against the section part, intra-virus in line with the section. So this one, it's an intra-virus to the 54.3. So they will not interfere and they will not take this risk in this case. Now question comes, how should we look into? So based on our analysis of both the judgments, with due respect to both honorable high courts, the reasoning, the way they have taken all the aspects, even on input goods aspect or input tax credit on goods, they have specifically given it is only for the purpose of deciding the inverted duty structure. And 54.3.2 is only for two aspects, zero rated supply and IDS. And they have already put a condition for a zero rated supplies subject to precondition that it must be supplied without payment of tax. So if you are doing with payment of tax, 54.3 will not be benefit to you. Similarly for IDS, only condition is the credit must be accumulated on account of higher rate of tax on inputs than your output supplies. But the Madras High Court has taken the input goods is only for goods, not for services. And that's why it has limited the interpretation of that. Now, obviously, people filing the application in the state of Gujarat, they will have the benefit. They can follow that till the Supreme Court gives the reverse ruling. In Madras or Tamil Nadu, people has to follow the Honorable Madras High Court ruling. So no refund will be processed. In other states, it's an anomaly. Maybe some already the number of writ petitions have been filed, but we need to see how these rulings and judgment comes out. So we need to wait till it's finally we get the final judgment of Honorable Apex Court, and accordingly, people can decide how they should move. But I will just take one example where one of our client, they are in mining. Mostly they outsource all their activities. So everything is now input services for them. They were not filing it. But now they filed. But after this judgment, yes, authorities will not process in multiple states, but people will prefer to go and file a writ in case the amount is rejected or partially allowed. Now we will move to next ruling, which is again a very relevant ruling if you see from a transitional provision. Yeah, now we are in the 4th year of GST. But still the aspect in relation to transitional credit or other provisions still prevail. And people who have stuck in multiple rulings and they did not take the Sabka Vishwas legal scheme, SVLDRS, and still their rulings or judgments have cases are pending at various courts or tribunal, they may consider this case a very interesting case where the authority alleged the SSE that whatever credit you taken is a fake. The supplier did not receive any raw material, he did not make any goods, and he did not supply it to you. So question of availment of credit by you does not arise. So you need to reverse it. But they have shown all documents. And please note the same situation will also prevail in GST, where you will say, yes, a fake invoice, which we can see number of years going on, will have the impact. They have given their all documents, including toll check post documents, BILT, ledger, bank statement, RG23A, which used to be registered earlier, but still they did not accept. So finally, the appeal filed to the sestate. And being the proving aspect is whether the credit is fake or not based on invoice issued. The same has been given the affirmative judgment in the case of Abe Chemicals, because number of parties were involved in this issue. Accordingly, the tribunal given the ruling, being the credit is correct, and now being the ruling is given under GST, as per transitional provision, assessee can ask for refund in erstwhile law. Last month also we discussed similar judgment. So wherever people have the pending litigation on Sandwit, they can consider such rulings where they can file the independent refund claims, considering the transitional provision which does not stop to have this expiry of the amount. And yes, being it's a rightful amount, people should claim it. That's all about the ruling about the refund, whether you see from the IDS or from the this aspect. Now we will discuss the ruling, which is of Tamil Nadu VAT, but it's again relevant from the GST perspective. ITC cannot be denied on mere non-payment of tax by the vendor. So here the issue was in Tamil Nadu VAT the law changed where till the tax is paid by the vendor, credit cannot be claimed by the customer. The same now we have the provision under GST. But the ruling has given a very relevant point which can come in the case of GST also. I will read the relevant ruling aspect which has been told. ITC cannot be disallowed on the ground that the seller has not paid tax to the government. When the purchaser is able to prove that the seller has collected tax and issued invoices to the purchaser. So when I have legible documents, I have paid tax to the seller. Why then the matching concept or any other aspect should stop me to claim the benefit? And in this case, they given the favorable judgment. And same way, it could happen that number of issue may arise because now the assessment already started. And where the question comes, the document is not reflecting in GSTR 2A. How can you claim credit? And being the purchase supplier has not paid tax based on their records, you need to reverse along with interest. And I have seen the one aspect here where one of issue where the people paid lump sum amount to one telecom player who became bankrupt. And it was a huge amount. So he did not pay any tax to the government under GST. So whatever credit is taken, it has been question marked by the officer. Now the issue is pending at the commissioner appeal. But looking to such judgment, if people would prefer to file a writ petition on this aspect. So now another point is very interesting again in the GST on employee recovery. As we all know, employer and employee are considered as related parties. So any transaction between them has to have a separate valuation rule, separate time of supply, and according tax to be paid if liable. Any service from employee to employer is not liable to GST, which everyone knows. But from employer to employee is not exempted. So please do not go only by just headline of nominal recovery from employees not liable to GST. It's an interesting advanced ruling of Tata Motors, where the query was different, answer has given different, and people I have seen are blindly following this advanced ruling without looking into the provisions. And please note, advanced ruling is only for an individual person who is applying and doesn't mean the officer cannot question it. The ruling is applicable only for the party who applied, authority, and the adjudicating authority. But it can be questioned at higher level by any of the party. The query raised by the company, we are taking services, non-AC buses of more than 13 people from our vendor. And then we do a nominal recovery by charging a coupon or everything from our employees. Whoever wants to use the facility, they can use that coupon. And accordingly, amount will be deducted from their salary. So their question was, after change in the February 19, that you can avail the credit on the non-AC bus or AC bus in regard to the capacity of more than 13 people. Can I take on full amount, or I can take, suppose 100 is the amount and I recover 20, 100 minus 20 on 80. Second question, being this activity is exempted when I do from a non-AC bus under notification 12/17, should I charge to employee or not? Or can I claim the benefit of exemption notification or not? And the last question was, same what we discussed in the part 1, my ITC will be restricted to 100, or I need to see 100 minus 20 on 80. So in first query, they told, yes, you can take the credit because law has allowed you to take the credit. On query second, very interesting, what they asked to claim the benefit of additional notification and what they give an answer. They told, under schedule of GST, clause 1 of schedule 3, any employer-employee transaction between the company and employee are outside the purview of GST, and being doing a nominal recovery, it will not be considered as a supply of service. So question of liability does not arise. Here, 3 things we need to look upon. First, exemption is only from employee to employer, not from employer to employer. Second, GST law does not go by the recovery of 1 rupee or 100 rupees. It goes by the value of the transaction, whether with profit or without profit. Third, being the transaction is a related party, you are paying 100 rupees to the vendor, but claiming only 20 from employee. An open market value concept comes into related party transaction, and you need to pay tax on 100. In my view, obviously, even Tata Motors will not consider that ruling, and they may prefer to pay taxes as they were paying. Otherwise, the question of liability will arise. And I will take recent example because last month we completed to an extent our GST audit. And one issue came from a client where they are special economic zone unit. They are recovering the canteen charges. They are paying 45 rupees to the vendor and only charging nominal 5 rupees from the employer. It is not part of the employment contract, not part of CTC, and not part of HR policy. The question came whether they should pay tax from July 17 onwards, because they are charging pre-GST also and GST. And the related party transaction came into picture for employer-employee only from GST. So here, the issue was, being an SEZ, should I pay the tax? Should I pay tax on 45 or only the 40 rupees? Or should I pay from July 17 onwards with tax and interest, or should I not? Being client has different view. So to protect our interest, being a chartered accountant, we taken a MRL, management revenue letter. But will it help the client or any of other aspect to safeguard on debt? So it's very important to look into each and every transaction where you're doing any recovery. So you need to have 5 queries to answer. I will just read. Whether it's part of an employee CTC, whether you're recovering from employee the full amount or a partial amount, is it part of an HR policy, Whether the client, employee have a cash option in lieu of perks, it is an optional or mandatory for every employee, and how the way the transaction has been entered. And this should be done for each and every employee transaction, from looking from a canteen to bus recovery to LTC or any other gifts you're giving as a Diwali gift and all. Then only it will decide whether liability will arise or not. That's about the employee recovery. Now we are going to move on the very other aspect topic, which is on the interest on net cash liability retrospectively. We have seen the last month they issued notification prospectively from 1st September. They have issued the press release, but it did not help the industry or the people to satisfy. As GST Council told, the liability of interest will come on net, not on gross. And accordingly, Section 50 was planned to be amended. But this notification has given the effect that Section 50 changes only prospectively. So to avoid any litigation, to avoid any hardship to the people, the department issued the circular in the month of September and given the administrative instruction to the officers. The instruction one is from July 17 till 31st August 2020, they may be instructed. Please note, it's maybe. It's discretion of the commissioner level or a chief commissioner level decide whether they will take this instruction and further share with their officers or not, to recover the interest only on net cash liability that has been paid by debiting the electronic cash ledger. So they may not take the any issue or any litigation or any instruction, procedure in another aspect to claim the interest on the gross. Another instruction they issued, wherever SCN, show cause notice, has been already issued, they need to be put in call book as a may. Again, may word has been used. So in the both cases, it all depend on the discretion of the jurisdictional commissioner, chief commissioner level, how the instruction has been given down, how they see the risk appetite and the other aspect of the ICC, and then only it will be followed, otherwise not. So again, till the retrospective notification is issued, all are in dilemma, whether I need to pay on gross or net. If I pay on net, whether I will get a notice or any other scrutiny or audit. So otherwise, exemption is extended up to next 1 year on ocean freight or air freight for export of goods. But still, I did not able to understand why they need to extend date by date. Why cannot they connect it with the transaction and the place of supply? Currently, POS is based on the movement and the origin part, but they can consider this case because in the PP, a prepaid model, it's input terms. In PP model, it is liable in the hands of the Indian exporter. In CC model, being a POS will be the location different, it will not be. So why not the same aspect can be implemented and clarified under the section and the rules, so that no need to again and again extend it. And please note this notification came on 1st October with effect from only 1st, but people were worried because consignment movement is on daily basis for people. Rule 86A, which I will going to discuss now, is about the blocking of the credit. And it's a power given to the officers if they believe any fake invoices on which basis the people have taken the credit, or fraudulently he availed the credit, he is paying the liability under section 49 by using this credit, or he is asking the refund. So availment of credit, utilization of credit, and refund, in all three aspects, the rule 86A can be taken to block the credit. Now, earlier circular has been issued, circular 3/20, where they clarified on which basis they can do it. But still, officers have number of queries, and these are number of 5 points, starting with if there is zero balance or nil balance in all heads of credit ledger, or there is insufficient balance to cover the entire amount to be blocked. How should I block it? So what they give instruction, you monitor the taxpayer, and whenever he gets the credit, you stop it. So it means once you come into scrutiny, they can monitor you and decide whenever they want to stop and block your credits. And they can do it because it's a discretionary power given under Rule 86A. Another scenario where you are nil or insufficient balance in the head to be blocked, but sufficient balance in other head. For example, SGST, you have a balance or no balance. CGST, IGST, or balance. But they want to block only SGST. In that scenario, what they mentioned, it too is to be noted that blocking in heads in the credit ledger other than the heads for which such blocking is to be done is subject to limitation of cross utilization. I cannot use the CGST for CGST, SGST and SGST for CGST, but IGST can be used for all three. And further, they given the pattern how should I use the each credit. In that scenario, yes, they will look into and then only they will block it. Now another issue, GSTR 2A versus e-way bill. Something is reflecting in e-way bill, but the taxpayer did not avail the credit under GSTR 2A. In that scenario, they told you need to monitor them, and there is no requirement that he should claim the credit. Irrespective of that, you have the right to block the credit. And if you are not blocking it, then you will be questioned. Then which basis, whatever material evidence you have. So you taken a contra view and did not block it. Last but not the least in this circular, whether blocking under Rule 86A, it is part of other levy or imposition of penalty or another as per section 73, which is for other than fraud, and 74 with fraud. They have simply told both are independent. And if you are blocking the credit under 86A, you no need to worry about that. You cannot issue one more notice under 73, 74, any other section. It means there may be multiple notices or scrutiny in the name of blocking credit may come. And that will lead to having the multiple proceeding and then multiple appellate level to be followed. So that about the Rule 86A block. Now we are going to discuss on e-invoicing, which was a very hot topic. The last date was 30th September. And now question came being number of issues and aspect have been changed. Whether really a date has been postponed or not. And what all other changes have been made. This needs to be complied with. And please note, in the end of July, they already issued the new schema to implement it by GSP, ASP, by GST, NIC, the other website, and again to be implemented by the individual company in their ERP. It was a time-consuming aspect and having a due date for GST audit. And I have seen number of messages on LinkedIn where people are questioning the intention of the government to put so much in hurry when the panic of epidemic is there. You have a GST audit and other due dates are there. Apart from that, if you see what they told, for B2B, for the company having the aggregate turnover more than 500 crore, the implementation date is still at 1st October. Only relief is you have 30 days so that you can issue a non-GST invoice, non-e-invoice, and then, but subject to putting on the portal and then again releasing the e-invoice. If you are not doing beyond 30 days, then you need to pay penalty. Only relief is waiver of penalty for 30 days. Otherwise, the e-invoice has been implemented from 1st October. And the penalty is 100% of tax or 10,000 rupees, whichever is higher. You can imagine people need to understand who are liable to have this e-invoice. Even today they are issuing the non-e-invoice. They need to rectify, put on the IRP, and again put a proper e-invoice to their customers. They need to also think from the customer perspective because he cannot claim the credit if the invoice is not valid and proper as per law. And even he can stop paying the amount to you till he get the proper invoice. They also clarified you need to have an invoice even for export transaction. And please note whether debit note, credit note, a challan, a proper invoice, all need to have an invoice, which already clarified even in number of rules which have been issued in the month of March. Another aspect which is very important, you will not see the turnover only of this year. Turnover 17, 18 and onwards. If you're crossing the 500 crore, any such year, you are liable to have the e-invoice. You cannot take the situation of epidemic. If my turnover is low, so that I will not issue. So I are still liable to have it. Now we come to the B2C, a business to consumer. So there's a big relief, given a 2-month relaxation. You can have a dynamic quick response code from 1st December, not from 1st October. Again, the same change. I need to see turnover from 17, 18 and onwards whenever I cross 500 crore. It should be embedded with IRN number. And you can give the e-invoice to your transporter. He no need to go with the physical invoice now. It's a good relief. Now the any movement of goods can go based on the e-invoice itself. Further, now they given power to commissioner. They can decide to whom to give the exemption to not to have an e-invoice. And they already given the exemption to SEZ, to banking and NBFC for looking to the turnover of 500 crore. That's about the e-invoice. Now I will again go to the certain judgments which are relevant to look into. This judgment is on natural justice, and always it's a very common principle on which people fight in the courts. But here the facts are different. The officer was in so hurry that on 13th February he issued the personal hearing notice for 14, and 14 itself he passed the order without giving opportunity, without waiting for a day. And it's very common when the notice is given, given chance to give whether you can attend it or you want the adjournment, and then whether you want to move more submission. Once the complete hearing is over, request by the assessee has been taken, then only the order is passed. But in this case, he passed 3 orders in GST law without even waiting for a day. Hearing was in the afternoon, 3 p.m. By 6 p.m., before he reached the home, he got his orders. That's why the assessee went to High Court. And the ruling given is the assessing officer, in all fairness, should wait till the end of the working day when the personal hearing was fixed and before finalizing the assessment. Finalization of assessment on the same day when the matter was listed for hearing would mitigate against the requirement of natural justice. So obviously, in the looking the all the e-notices, e-hearings, it should not impact the natural justice scenario. A proper time, justification should be given to assessee, and then only the justice should be followed. The other aspect I will take on the Sabka Vishwas scheme, and it's very good ruling. Along with, I will also discuss about one judgment which we did not mention here, but it was also covered in the Economic Times yesterday. So here the issue was the declaration of the assessee was rejected because the redemption fine was not paid. The question came whether the areas of tax definition covers fine or not. And if you read, it covers tax, interest, penalty. And there is no separate provision for the redemption fine. It is as part of the act. So when the tax which is mentioned as an area of tax is part of the scheme. How can they ask them first to pay and then only look into it? That's why this issue was went to High Court, and the High Court told the test which is required to be applied to ascertain the amount in areas as per scheme. It would include both the amount of duty as well as amount of redemption fine, which is required to be recovered from a taxpayer. So it means people who have only the liability of redemption fine at any level in the erstwhile central excise law or service tax, they can still would have filed a declaration. And in case the officer had rejected, then their opportunity to go and request to High Court to clarify on that. Because now any ruling we are getting mostly by the rate only. And the what further High Court ruling which has been filed is on the interest. In case I have only interest liability, do I am eligible to continue, because in that scenario also the declaration was rejected. So in that case also they told, yes, I sorry, it is still the ruling did not came. It's only the writ filed. So we are waiting for judgment on that part also. So any redemption fine, interest or penalty stand alone in any of this case, and people would have filed already in Sabka Ashpa scheme, they have chance to continue their relief, because this scheme has given big relief. Until now, the government got around 30,000 crore worth of declaration under the scheme. So we can imagine the scheme has given a big relief to number of taxpayers to resolve all the past issues. Again, ruling which we are going to discuss is about the legal right, and which is very common, and we have seen number of judgment in apex court. And it says substantive rights should not be denied on account of procedural irregularities. This judgment is of state and from a customs, but the principle applies for all the legislation, including GST. The here issue was the assessee has exported the goods were defective, so he has to re-import and again export. So when he's doing a again export, he needs to declare as a duty drawback shipping bill, which he missed out. He declares a normal shipping bill. And under the law, shipping bill amendment is allowed. Even last month we discussed in the case of MIS claim. Same way here, he wants to change from the normal shipping bill to the drawback shipping bill. And the request was rejected because there is an error from his side by not declaring the drawback shipping. And as usual, being it's a principle which is laid down at the number of court judgment, they also followed the number of judgment of courts and told, as circular and the law allows to amend shipping bill in the specific scenario, you need to follow that and make the amendment. So it's only the issue about the shipping bill amendment. But if we see, this issue is not only for a shipping bill amendment for drawback only. It's also for the number of MEIS or EPCG or other claims. Well, people are suffering because of some clerical error. And when substantive right cannot be denied on the ground of procedural issues or gaps, it should be followed in true spirit. Now we will discuss two rulings on the documents which I can ask from the department, or the document which I submitted to the authority and they cannot question it. If they want to question it, they need to prove I am wrong. The first issue is where the erstwhile service tax judgment, where the show cause notice issued have so many legality and factual error. So assessee requested the authority, please verify it and again give me the revised SCN and I will reply on it. So the adjudicating authority appointed the verification agency, an independent department, and they are given a scrutiny report. And the request from assessee is, please give me a scrutiny report so that I can give you reply from my side. And they declined it. When I have given you the detail, you notice have so many gaps and error. And based on that only you've done this assessment and verification. How can I be denied on this basic document, which will help me to give a proper reply to you? And accordingly, in this case, assessee went to High Court and they given simple ruling. By giving this document, you are not hiding or you are not putting a case on negative side from department perspective. You are just giving the factual thing which is part of your SCM, and being the verification report should be made by you. By just delegating to other authority does not stop being the delegate authority is not an adjudicating authority. So assessee right continues and is able to have the fundamental right to ask the document and accordingly reply to you. That was about the Madras High Court judgment under TVS group issue. Another is very interesting part. Yes, it's again from the erstwhile law, but it will help also in the GST era, where if they are questioning my documents or third party certificate, which I'm getting it based on their verification of my books, if they feel it is not appropriate, it is not as per the facts given to them, they have right to do the review or scrutiny. But they simply cannot deny my document because self-assessment prevail, whether in the erstwhile regime or in the GST regime. Here again, the CST assessment order was passed. He submitted the CA certificate on the sales returns aspect, but they did not accept the CA certificate and issued the negative orders. So here the ruling has been given. When the company itself denies the sales in question as per the facts, they cannot do anything more. And if the assessing authority is of the view that it's a false statement, the onus is on the authority. So if they want to prove it wrong, the authority needs to prove it, not me. How can I prove myself wrong when I am giving even the certificate from a third party? So that's about the two aspects which I told you about the documentation to department and from department. Now we are going to discuss the two advanced rulings. And these rulings, if we will discuss, you will understand it has given the industry question mark on their transaction, first on the hospital and second on the franchisee services. So here the issue is, if I am providing the medical treatment, and for treatment someone has to reside in my area, in the hospital, or you can say naturopathy center or any place, and I'm charging him based on the nature of rooms, a simple room, luxury room, ultra luxury room. Whether the bifurcation based on room criteria will change the taxability of the transaction. Here being a naturopathy also comes in the medical science, but they were providing the various services with multiple accommodated services, and the pricing is changing. The treatment is changing based on coverage of the treatment based on room you opt for. And special point is they were not registered under Clinical Establishment Act 2010, because as per the Gujarat legislation, they did not consider this act completely. So as per their view, the Clinical Establishment Act 2010 has not yet implemented in the Gujarat, so they are not registered. So their simple question is whether my activity is exempted, being I am providing the medical services which is exempted, and the room and all are the incidental to the main service, which is a medical service. And if you see, all medical services are exempted if provided by clinical establishment and other conditions to be followed with. In this case, naturopathy they are providing at their center. Only issue is to do multiple room facility. So what they told, the service you're providing is a comfort supply covering the three aspects: the stay, food, and treatment. And being the room is deciding the price of the product. So the principal supply, we decide the nature of supply under comfort supply is the supply of room, and treatment and food, it's ancillary. So the comfort supply we are providing, in which principal supply is room stay, so it is liable to GST. So it's going to question mark on all the hospitals. And we have seen in the COVID situation where the hospital rooms have the exorbitant rates, having the multiple rooms strategy or the styles, and charges for ICU for other things are different. So can we say it is liable to GST? Because they are charging based on rooms, even based on the nurse and doctors they are facilitating for the type of luxury of suite rooms. And even there are a number of isolation centers opened by a number of NGOs like GITO or other people. And they're charging them 2,000 rupees or 4,000 rupees from people for 1 week or 2 weeks. Can we say that being they are charging for mainstay and treatment is only ancillary, even they need to charge the tax? So this ruling has put a very big question mark on the hospital industry. It's very important for people to represent how the way the comfort supply should be interpreted, how the way anyone can decide what is the principal supply. Because definition is very qualitative and it is given the interpretation aspect in both sides. And third, how can the exemption can be changed just based on interpretation of principal supply? See, bundled service used to be concept under erstwhile law, and it was on the basis of it never gone in the principal supply, and same way would have been followed in the GST. And this ruling, yes, going to be a question mark on the industry itself. The next ruling which we are going to discuss is about the franchise services, and which is more about when I am working on a principal agent relationship or not on principal agent relationship. I am just a franchisor or franchisee on principal to principal. How can be being I am using the brand of others by just using a brand of others can be a P2A. It should be based on a terms and condition. It should be on the condition given previously under the law, which I captured in my agreement of contract. In this case, just this person is selling the Aloha brand of the main Explorer Knowledge Resource LLP. And question is, being my turnover is less than 20 lakhs, do I need to register? And they have taken the point, being you are a franchisee using the brand of others, and being the infrastructure and manpower fulfillment is must before you commence the operation. It's a P2A transaction and liable to be registered. So they have completely interpreted the agreement, but did not appreciate that they were working on principal to principal and put them in P2A and told them to register. So all the franchisee transactions they may have issued tomorrow, where they need to take registration if the proof comes that they are working on P2A and not on the P2P. That's all about the rulings and all under GST. Now we're going to discuss about the GST Council recommendation and changes in GST portal. And the big changes in GST portal is now debit note, credit note can be given as a single number for a particular vendor. Please note particular vendor. It cannot be for a month completely. It should be for every vendor. For multiple invoices, you can have one debit note, credit note, and that you can report. And same way, you can also report for your refunds filing. And if you can see here in screenshot, here you have to give based on the receiver GST IN UIN number. You will have the one debit note, credit note for multiple invoices, but should be connected to only one vendor. You cannot have the one debit note for multiple vendors. And you need to again define for deemed exports, for accessory supplies with payment, accessory supplies without payment, supply attracting the reverse charge, and intra-state supply attracting IGST. Now we come on the GST Council recommendation, which happened on the last, I think this Monday only. And so many changes have been announced, and some are very good for people who are MSME players and who turnover is below 5 crore. We start with the return related, with companies having turnover more than 5 crore. Now, HSN or SSE, a harmonized system of nomenclature or a service accounting code, need to be mentioned 6-digit level. And all these changes will be notified. You need to wait for notification only for B2B supplies. For notified categories, it will be 8 digits. And please note, HSN is for 8 digits globally. People having turnover below 5 crore, so many good news. Apart from GSTR 1 for below 1.5 crore, now GSTR 1 and 3B up to 5 crore turnover quarterly from next year. Due date for GSTR 1 extended from 11th to 13th. You can only upload to table 4 of output supplies without giving other details. You will pay tax monthly by challan. Being there is no monthly returns like used to be in service tax, you will pay only tax monthly and return will be quarterly. And for the first 2 months, if you don't know the amount of tax, you can see your previous quarter liability and pay 35% for first 2 months on net cash liability basis. And here HSN and SSC is must for 4 digit. So for 5 and above, 6 and 8, for below 5, 4 digit. One more thing, your GSTR 3B from January will be auto-populated. So GSTR 1, you will file it. GSTR 2A will come automated. GSTR 2B will be made automatically, which launched in the month of August. And 3B will also be automated. But where we have seen where people are experiencing being multiple returns are being announced and changes, the reconciliation aspect is increasing more. Because still the RECO amount used to earlier distribute 36.4 to 2A, 2A to 3B. Now you will have to see the 2B to that and again to 1 to 3B. All ITC aspect in GSTR 1 to 2B of supplier will be automated from next calendar year. And the returns, GSTR 1, 3B filing system extended till March 21. So new return concept is not coming into picture, and 1 and 3B will be legalized and incorporated in the law. You can imagine that we are filing the return 3B is not a valid return in the law. And you've seen the last judgment came where they told when the due date of return or annual return, whichever is higher, when the return is not existing. So I will assume whenever I'm filing the annual return for the purpose of claiming credit. But the government has again done a retrospective amendment as we've seen. Again, we are on the same page. And now being the change is going to be implemented in the law, yes, it's going to be part of the GST law officially. For refunds, if you talk about, the bank account should be authenticated to Aadhaar and PAN. And being now the Aadhaar is authenticated every place, same has been applied here also, apart from registration. And now you can sign your application just by a OTP when you do Aadhaar authentication. You no need to even use the DSC. So that's all about the GST Council recommendation. I think some more are there. This we will discuss more. We have seen in the Atmanirbhar Bharat, they have given the big relief for the satellite services, which they given power beyond the ISRO. So now any company, any startup can provide the satellite launch services. So to promote startups and other people to come into this era, the government decided to exempt it. And the exemption will be applicable the date it is notified. And we have seen number of people based on recommendation, people start taking the benefit. Please wait for the notification and then only avail the benefit. In India, we have seen whenever in tax comes, it never goes. And same thing going to happen for a compensation cess. Objective was to compensate the states and assume in 5 years it will be closed. And now in the name of epidemic, and name of a debate should be going to option 1 or option 2 for the recovery of balance amount. The government has decided it may go beyond 7 years, 5 years, or 10 years. So we can assume it will remain with us. And being this cess in addition to GST, it is not on tax. So all the sin goods, as a definition of government, will continue to have. And last is all the changes are going to be amended, incorporated in the rules, including the form compensation 08, which you can file in nil through SMS. That's all about for GST council recommendation. And now I will take certain aspect. I will not go through all this because all the change in dates and all. I will move to the customs part now. And in the customs, first I'm going to discuss one ruling on the refund of penalty paid for late filing a bill of entry. When I have never seen whether government has ever paid a interest and penalty back to the assessees. That's why I've chosen this case, an interesting case. And the complete question mark was on the department side. And I will just tell you the facts. One specific stearic acid was partially exempted till the amendment of tariff till 30th June 17. Now tariff changed and exemption notification also been changed. But due to error from the CBIC, earlier called to CBEC, they have put an old tariff heading. But person has to declare the goods under new tariff heading. So officer at the ground level did not appreciate that and simply asked them to pay 30% BCD with interest and penalty. So in customs, you cannot wait because your goods may be perishable, it's required for the operation. So they cleared the goods, paid the duty, and meanwhile they filed the appeal at Commissioner Appeal and Tribunal, and also went to CBI to tell them you have the error in your notification. Please change it. They understood, they made amendment. But Commissioner Appeal did not appreciate, and they given only refund of tax paid, penalty was not given, so he went back to cess state. And they have given ruling, being the entire event of delay and the apparent error in the notification, being aware by the officer, and the bill of entry was also filed, and he cannot file till the notification amended, and he paid a tax to you. Being all regions are aware to you, you cannot ask them to pay penalty, and it's an error from your side. So it means penalty in the law should not be imposed if I do not make any error. And that's why if you see the rules of bill of entry regulation 1976, it says penalty for late presentation of bill of entry shall be liable to be paid if there was no sufficient cause for delay in filing the bill of entry. And in this case, the delay is because of officers. They are not able to understand the issue. It's not the fault of the assessee. That's why it's right to get back his penalty amount. And same can be in any legislation. If I am not at the fault, and in the force I paid a penalty, it's my right to get back this penalty along with interest from the department. It's a good relief given for the courier shipping bill. You can have from the RMS system can be cleared by X-ray and even LO. I will not go in that. We are going to discuss on the sea cargo manifest and transshipment regulation related changes. These changes came in last year. Whenever you make any import of goods, export of goods, or any vessel engaged in the coastal carriage within the two states, in that case, you need to file a manifest. And they brought this new regulation. Earlier, it has to be implemented from 1st August 18, postponed to 1st August 19. Due to epidemic, further postponed to 30th September. But still people were expecting some relief because nowadays everything is moving e-mode, but still the systems and people were not prepared. The relief given is the bond and bank guarantee is required to be given within the postal security or NSC. The limit was earlier 10 lakhs reduced to 5 lakhs. Big relief. Second, AEO, authorized economic operator, is not required to give this bank or bank guarantee or NSC. Now they included even the customs broker. So any custom broker also will not give this bank guarantee. It's a big relief indirectly for the companies also, because otherwise they will charge you levy for all this, because they have to pay some amount as a bank guarantee, deposit or anything to the bank for that. Regarding transition provision, they extended date to 30th November. Earlier it was 30th September. Still the people have time to shift to this new regulation. So in this scenario, they've given the big relief to people where they're still not able to do it. This is the last aspect we are going to discuss. Last week we done one detailed session on Carota, which has been implemented from 21st September. So any goods you are procuring from the FTA country, free trade agreement countries, you need to put the all documentation and proper with you for every bill of entry. Otherwise, your goods can be confiscated. Now, question came about the provisional assessment. If I'm getting the goods, I need to clear in the provisional assessment. Whether do I need to give a bank guarantee or a cash deposit as a security or not for a differential duty. For AEO, Tier 3, Tier 2, they have given relief, which continues, except for if the cases related to determination of origin under FTA, based on the reasonable belief that the matter involves misdeclaration of origin, or a cases related to verification of signature and seals under FTA. So under custom, there is different seals which has been globally recognized. In both the scenario, irrespective of state of AEO, other aspect, EOU, SEZ and all, you need to give 100% bank guarantee and cash deposit. So government is taking this Carota very seriously, and they are putting all the imposition. And I have started seeing from last week itself, the consignment of people have been confiscated or have been stopped. And they need to first give all documents to the authority, and then only they are clearing it. So that's all from our sides. And in case you have any query, or I think you can put it now, or you can even WhatsApp to us or email to us. We'll be happy to share. So today we discuss about the changes on the GST Council recommendation. We discuss about the number of rulings. We also discuss about employer recovery. And please note, do not take this ruling seriously. Read this ruling properly, then you will know whether it's going to help you or not. We discuss about the fundamental rights where people can use and natural justice and all. That's all from our side. If any query we can take, or we can close our session. I will wait for 2 minutes and then we will close our session. How to do stop live stream? Hmm?